couldn't talk peace with me. They tried, and I was like, nigga, this schoolyard.
It's your boy Crypto Blood, and I want to introduce you guys to a new exchange, Bityard. They do cryptocurrency contracts. If you're like me, an active trader, you're probably sick of the market manipulations, forced liquidations, accurate Bitcoin reference rates over at Bityard with K-line weighted averages, no VPN hassle, available for US citizens, and fully regulated in Singapore, Australia, Estonia, and the US. Profit losses are all in USD as well, and no fees with US withdrawals. And most importantly, you can do deposits with fiat. Unlike BitMEX, you can't do that, right? So check out bityard.com. I'll leave a link in the description below. Yeah, it's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. It is June 12th, 2020. Shout out to my man Wire Sparks for this one. I'm adding this one to my list, man. I like this one a lot. Paul Walls, Swangin' in the Rain remix. I've heard the original, never heard the remix. Thanks for the song request. Hope everyone's doing well out there. Welcome to another episode. Today, guys, we are going to be looking at something that Dash has done. And, you know, this article kind of, to me, possibly makes a stretch here. But I'm going to read the whole article for you. Essentially, they're saying that Dash, the cryptocurrency, is now backed by gold. And they're saying that because the foundation basically bought gold for the first time. So I'm going to look into the details and read that with you guys and extract some of the important points and see if this really has any meaning here. You know what I mean? Just because the foundation buys gold doesn't necessarily mean that your Dash coins are redeemable in gold. And that's a whole nother subject about cryptocurrencies backed by physical precious metals. I'm not a proponent of that, and I'll explain why as well. Also, an investor claims that there's no way to cash out from Grayscale's Bitcoin Trust. This is important. I want to bring this up because some people will go this route, unfortunately. I think going the non-custodial route is the best way, but if you have to go the way of a Bitcoin Trust, maybe because of your 401k or whatnot, it's important to see exactly what's going on here with this claim by an investor. And then lastly, we've got out of news BTC. Tudor Jones' latest inflation warning spells another bullish case for Bitcoin. Veteran hedge fund manager Paul Tudor Jones on Wednesday criticized the Federal Reserve quantitative easing policy. We've talked about this many times before. I'm going to go in detail about my feelings about how the Federal Reserve's actions are going to impact cryptocurrencies. You may be surprised. There's actually a different angle in which I think cryptos are going to rise because of the Federal Reserve. Not directly from them money printing. And we'll see if you guys think this makes sense. All that on today's episode of My Two Satoshis. But before we start, if you guys find these types of videos informative, make sure you like, share, and subscribe, and click that bell to receive more videos like this. And while I've got your attention, I want to let you know about Dudx, the new promo that I got going on with them. I tailor-made this for you guys, all my subscribers. You just have to be subscribed to my channel and use the link in the description below. And what you will get an opportunity to do is win 50 USDT tokens every 2 weeks. I'm doing a drawing. Whoever has the highest volume in trading, you will win. So get over to Dudx.com. Actually, use the link in the description below. Sign up and enter to win. That's all you have to do. Be a subscriber, sign up, and I'll make an announcement every 2 weeks. So stay tuned and look out for the next winner. Check them out. Link in the description below. Don't forget the Crypto.com zero credit card fee is still in effect. Make sure you get over there. Use the link in the description below and sign up using that promo code CBLOOD. That's the letter C, blood. And you will get 0% on your transactions on purchasing cryptos with your credit card. That's important because normally it's 3.5%. So if you're putting $1,000 in, you're talking about $35 you're saving. You put $10,000 in, you're talking about $350 you're saving. So you can kind of get the picture there. Crypto.com, check it out. So the heat map for today, we got Bitcoin up 1.5% to $9,462. Pretty much in a very tight trading channel right now. We do have Ethereum up though at 2.3% to $237.66. Binance up 1.2% to $16.62. EOS is up 2.3% as well to $2.59. We got Litecoin up 2.9% to $44.86. ADA is going crazy again. Digibyte doing its thing today as well, up over 20%. Yikes. Still got some DGB. Shout out to all my Digibyte family out there. CRO token, which is the Crypto.com chain token, is doing very well. Has been for the last few months. Haven't really highlighted it, but I've been staking this coin and earning interest and appreciation in the asset itself. So doing good. But again, Bitcoin It's kind of in a tight channel right now. Nothing to really talk about. We are trying to close above this 94.63 area, which I've had drawn for quite some time. That's an important range. Also, here's another one I want to show you. That's another area of resistance, just like that. So, we're kind of trading tight right now. Hopefully we can start closing above this red line, maybe about 6 or 7 candles. That would be great. And then try to take out this 98.67 range. If we do that, we may have a chance of breaking out here to 11,000 or so. Let's take a look at what Grayscale, or an investor over at Grayscale, is claiming. This is important to highlight for those that maybe your parents or even yourself have some Bitcoin in Grayscale Bitcoin Trust. So an investor has raised major criticisms about the way in which the Grayscale Bitcoin Trust is set up. This investor and analyst and head of product at crypto market data firm Messari raised major criticisms about the way in which the Grayscale Bitcoin Trust, or GBTC, is set up. So on June 1st, he tweeted about Grayscale's official website, according to which Grayscale Bitcoin Trust does not currently operate a redemption program and may halt creations from time to time. He suggested that the absence of a redemption mechanism can result in GBTC trading at a discount compared to the net asset value, or NAV, of the fund's assets. He essentially is saying that you're just donating your money over at Grayscale. He said without the ability to redeem, you are just donating your money to Grayscale's founder. However, we do see that Grayscale is growing at a fast pace. In recent news, it's clear that Grayscale's cryptocurrency holdings are growing at an astonishing pace. As Cointelegraph reported at the end of May, Grayscale was at the time buying Bitcoin 1.5 times faster than new units were even being mined since May 11th Bitcoin block reward halving. To me, guys, you need to stay totally clear from these types of platforms. There's no need. Just buy Bitcoin directly. Okay? In a realistic scenario, everyone's not going to be able to handle all of their Bitcoin on their own. You're going to have a mixture. If you're going to have a mixture, try to have your custodial accounts be less than the accounts that you control your keys on. Try to spread that risk out just in case something happens. You never know. With the stock market and Grayscale, they're tied to the equities markets. Let's take a look at what Tudor Jones is saying. Paul Tudor Jones, about the recent inflation warnings spelling a bullish case for Bitcoin. So the veteran hedge fund manager Paul Tudor Jones on Wednesday criticized the Federal Reserve's quantitative easing policy. He warned that the central bank might lose track of its inflation, and that would follow its unprecedented bond buying programs and lower interest rates. Tudor Jones last month announced that he is investing in Bitcoin as a protective measure against inflation. And this was a big news. I actually touched on this when this happened. This is really big news. If you're not familiar with who he is, he's a big guy in the game on the Wall Street side. So for him to say this, to me, is a watershed moment for cryptocurrency and Bitcoin specifically. He is allocating 1 to 3% of his investment portfolio into Bitcoin futures. In May 2020, he noted that the U.S. central bank might find it almost impossible to keep track of it. He said trying to actually fight inflation is going to be really challenging because he doesn't think they'll be able to raise rates enough without having a really deleterious effect on the rest of the economy. Tudor Jones' stress on inflation, meanwhile, is long-term. In an investment letter published in May of 2020, he said the central banks would be on the hook to aid an increasingly leveraged economy. He highlighted the U.S. M2 supply that rose at rates last seen during World War II. Tudor Jones admitted having bought Bitcoin futures to protect his $22 billion hedge fund from inflationary risk. So again, that's big news for us, I think. But my view on why I think the central banks are really going to make Bitcoin go up is simply because you see all of these DeFi, right? These staking reward programs on various platforms. I gave you a list from Coin Market Cap where you can take a look at the highest yielding ones. But I think you're going to see these. They're already popular, but they're becoming more and more popular, and it's going to cause more money to flee the bond market, even equities, into something where they can yield better returns on their money. Because if everyone is in the same trade, there's no yield. You can't beat anyone else. So eventually, I think the correlation with Bitcoin and cryptocurrencies are going to break. You're going to see a lot of people begin to park capital in assets like Bitcoin and even in assets like stable coins and get higher yielding interest than they would over in traditional markets. That's why I think that will be the catalyst a chase for yield. That will be the catalyst for individuals and institutions really to pile into the crypto space, because we understand that Bitcoin in itself does not yield anything. So if there are these financial instruments or programs that become popular, you will see a lot of money pour into this industry, in the crypto industry. So that's how I think you're going to see a huge rise in liquidity, a huge rise in money inflows from traditional markets into crypto. And of course, what does that make Bitcoin do? Head higher, head higher. Maybe that stock to flow will come true. That $100,000 or now $230,000, I think, Bitcoin price in another year or so. So we'll see what happens there. But let's talk about this main article for today. It's out of Crypto Daily. They're saying that Dash cryptocurrency is now backed by gold. Let's look at this. I don't know. I was a little skeptical. I read the first sentence or two before penning this, but it says that the Dash Investment Foundation's first gold buys were recently triggered on Vaultoro, which means that in a manner of speaking, the Dash cryptocurrency is now backed by gold. And this is essentially quoted by Amanda B. Johnson, who is Dash Investment Foundation supervisor. It says the DIF recently purchased physical gold on the crypto to gold trading platform Vaultoro as part of the fund's Dash to Gold rebalancing strategy. So here's more details about this Dash to Gold rebalancing strategy. So they're essentially showing here to the far right, this pie circle, that Q1 portfolio allocations was all Dash, but in Q2 they're going to essentially have 25% of their portfolio in gold, and all the way by Q4 of this year they're planning to have 25% in gold, 25% in private equity, and the remaining 50% in Dash. So essentially, from a visual standpoint, that's their plan, their Dash to gold. I like that little saying there. They go on to say that the goal of the Dash Investment Foundation's strategy is to accumulate more Dash and more gold by rebalancing between the two uncorrelated assets. The main idea is to sell Dash for gold when Dash breaches 50% of the portfolio, and to sell gold for Dash when Dash falls below 10% of the portfolio. This ensures a counter-cyclical trading strategy that sells assets high and buys them low. In addition to the passive rebalancing strategy, the foundation aims to actively invest in blockchain venture capital funds and startup equity. So it looks like Dash Investment Foundation doesn't have a lot under investment, or under management, I should say, AUM, only $271,000. Number of holdings, of course, right now, at that point was 100% Dash, but they're going to be, or have been, rebalancing as of today. It says that Vaultoro is a venture capital backed cryptocurrency exchange enabling people to trade between crypto and physical allocated gold bullion. Vaultoro supports crypto trading for Dash and Bitcoin. All gold is secured in top tier Swiss vaulting facilities. Well, to me, just kind of reading into this more, it seems like a stretch, this article. It seems like a stretch to say that Dash is now backed by gold. I don't think so. I mean, you can redeem Bitcoin for gold at Vaultoro, but it almost seemed like from the headline that I could redeem a fixed amount of Dash tokens for gold ounces, whatever that fixed amount is. To me, that would constitute being backed by gold. This just looks like the foundation has decided to kind of diversify their portfolio into gold. That's cool. But to me, I don't see that being a case where Dash is actually backed by gold. I don't know. You guys let me know your thoughts on that. Still a good idea. I personally am not a fan of gold-backed or precious metal-backed cryptocurrencies. Pretty much defeats the purpose. If you understand cryptocurrencies by nature, you are verifying them. The value in them is through mathematics. It's through math. You don't need a physical backing of anything to add value to it. The value is in math. I just think it's like double speak there when you talk about having precious metal backed cryptocurrencies. It's not needed. If you want your precious metals, you need to own them physically, have them in your hands. If not, it's no different than being in a vault over in Switzerland. Let's just say Switzerland is taken over, or they have a coup or something and all their gold is stolen out of vaults. What are you going to do then? Your gold is thousands of miles away from where you are. It's almost good as nothing. So to me, have your gold, have your precious metals, silver, whatever other ones, have that in your own possession, just like with cryptos. Cryptos, you should have your private keys, have them in your own possession. No one can freeze them, can seize them. And that, in most cases, that's where the value and the power of cryptocurrencies are. So Just wanted to read that, give you my 2 Satoshis on the situation. Yeah, that's pretty much it for today, ladies and gentlemen. Happy Friday. Shout out to my man Wire Sparks for the song request, Paul Wall, Swangin' in the Rain remix. If you found this video informative, make sure you like, share, and subscribe. And click that bell to receive more videos like this. I'm out of here. Holla!